Market up big on a couple things. Tesla earnings were bad, but also good. We'll talk about that in a second. And then if we take a look at, of course, some of the other big headline stuff, which was basically Trump responding to the whole uncertainty around Powell and actually saying that he has no intention to fire him. And the market loved that. Obviously, that was a big concern the last few days. Is there going to be kind of infighting, if you will, between the U.S. government, Powell, and the Trump and team? Are they going to get rid of Powell and all that? That really had the market uncertain for a couple days. And then all of a sudden, again, yesterday we get the announcement, Trump saying, I have no plans on firing him. And so the market loves that. So NASDAQ's up 3%, just another day in this crazy market, man. That's all it takes right now. One good, sliver of good news, and this market is up 3%. Pretty crazy stuff. This is why I find it really hard to try and short an environment like this. You have, again, at any moment that things get ugly, Trump has the power and knows he has the power to reverse that fear factor very quickly with a single, mention to a reporter or to Bloomberg or CNBC or whatever. If he makes one single comment, those networks kind of broadcast out what he has said and can very quickly move markets. It can go both ways. So we're living in this environment where, you have tweets and comments to reporters dominating market moves. How do you trade in an environment like that? I'll tell you, it's not easy. It's not an easy environment. And if you have been around trading for a while, then you may remember that this was how it was in, Trump's previous administration, 2019 into 2020. A lot of focus goes on Trump, as opposed to, Biden, who there was still headline movement, but Trump is just way more hard to predict, it seems. And I'm not saying whether you like him or not. You might like what he's doing, you might dislike what he's doing. The point is, he's very off the cuff, and from a trading perspective, that makes things pretty interesting because, of course, one single, quick comment can cause the market to rip or the market to dip. Real quick recap on European numbers. How did the euro do this morning? I'm going to come back to NAS because it's top of mind right now for me. Okay, a little bit of a mixed response on euro dollar. Let's just take a look at the UK pound here. A little bit mixed there as well. How's dollar index doing today? Why is that not my dollar index? Let's go here. Go daily. Okay, so dollar index, a little bit pushed lower here this morning. So UK PMIs, manufacturing services. Manufacturing hit expectations. Services PMIs were a miss. Pretty substantial miss, actually. So UK PMIs coming in a bit soft. You got US PMIs coming out in 15 minutes. That could move markets. Then you have French came in line with expectations on manufacturing, slightly soft, and then slightly soft on services. German was strong on manufacturing, and then a little soft on services. So kind of mixed overall. We're just going to react to this data, and then we will bring it in. Forex James is up next. He's going to be joining us on the call. Sorry for keeping him waiting. Just wanted to get this number out. So we got manufacturing PMIs coming in better than expected. So that is upbeat for the U.S. economy, although services PMIs coming in a little bit light. Taking a look at the market's reaction, nothing just yet in terms of a significant move off of that. Don't be deceived here. We did also get kind of that opening rip off of the stuff we were just talking about with the Trump not looking to fire Powell. Take a look at a 5-minute chart. You can see we've just been drifting up here into this news. News comes out. Market doesn't have too much of a further reaction. We launched the Edge Finder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the Edge Finder is producing now. The Edge Finder has helped traders go from beginner to pro in terms of the fundamentals, and has helped many traders go from unprofitable to finding the missing pieces in the name Edge Finder. So if you're not already using the Edge Finder, let me tell you about the biggest discount that we offer all year long, starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the Edge Finder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the Edge Finder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the Edge Finder at the super discounted prices. Thanks for watching. And now back to the show. James, we got markets moving here quite a bit today. I was just talking about how we have Trump and Powell seeming to proverbially shake hands in the meantime, not trying to fire them. What are your thoughts on everything? What are you what are you watching right now?
Yeah, so I am looking for dollar shorts to continue. So I'm still in my Swiss yen short. Took a long on euro dollar, which isn't doing too hot at the moment. So this one is very simple because the markets at the moment, they seem to be in very clear trends, but the pullbacks are very, very minimal. We've had the same thing on gold as well, where you might be expecting a 50% pullback here, but we're just not getting that type of price action. We're sort of consolidating rather than actually pulling back. So looking to capitalize on a euro dollar long idea. Whether it will bounce here, I don't know. We'll see. Similar idea on gold, which is also looking a bit dire at this point. But at the time, gold was rejecting the 0.618 level, along with the 50 moving average. We've also got the Edge Finder scanning. It's bullish on euro dollar and gold as well. Copper, we took copper this morning, but this wasn't my trade, so I'm not really sure 100% on the thesis behind it. And we've got a euro yen short as well.
Got it. Yeah, no, it's it'll be interesting to see how all this stuff plays out. Right now, we're seeing a little bit of a knee-jerk reaction on the price of gold for the same reason it seems that we're seeing the rip up in the Nasdaq, right? So Nasdaq up significantly on the idea that Trump's not looking to fire Powell, and that security seems to also be dragging gold lower at the same time, right? So we know gold has been really thriving here recently off of uncertainty across many, many different facets, whether it be China and the US and Powell, US and Europe. I mean, it's just a continuous kind of uncertainty going on at this time. I'm probably going to get trailed out of this gold trade myself. I'd be interested to see if we get a bigger pullback, if I can re-enter the trade. But right now, again, looking just absolutely blindingly green for the day on indices, at least at this time. You got the Russell up 4% as well. And also some other... Yeah, go ahead.
No, so I was just going to say, I think the markets are very crowded at the moment. I mean, retail positioning is heavily long, specifically on silver. So I think a natural flush of the markets is coming at some point. I mean, you can say that all the time, but I think things like downside on copper, downside euro dollar, maybe some on gold as well, to allow profit taking and get some of the crowdedness out. So we'll see, but it's not a shock to see these markets come a little bit lower or a little bit higher at the moment.
Yeah, I think that's fair. I also like the euro. I mean, there's so many currency pairs against the dollar. I like your idea with shorts on the dollar as well. There's several charts that I would like to be a buyer on, like the euro, like the pound. Most of the dollar crosses, I'm bearish on the dollar, but just waiting, right? So I think, like you're saying, this little bit of a flush out. Let's say if we get this kind of move, or we see a bigger retracement down to 1.09, that might give you what you're talking about, where we see kind of a reset on this move. We could still continue higher in the big picture, but maybe we need to kind of recalibrate and pull back to some moving averages, some trend lines, some key levels of structure on this chart. Same thing with the pound. Again, really stretched here. Doesn't mean it can't keep going. Obviously, we know that's a famous last word, but we do know also that when we get these kinds of moves and then they do retrace, they can pretty quickly violently retrace when they're ready.
Yeah, absolutely. I also saw an article a few days ago saying that the ECB is likely to speak on the strength of the euro because it goes against a lot of their policy at the moment. So whether it'll be artificially dragged down by the ECB is something we'll have to keep an eye on, because what you don't want to do is get in a bias of, the dollar's down, let's just buy euro dollar, and not account for the fact that the strong euro isn't necessarily an ideal situation either.
Sure. Yeah, no, that definitely makes things tricky. And the other thing, James, I was listening to somebody talk about this. If you're someone who has been invested in, U.S. stocks in Europe, like if you're a European invested in U.S. stocks or in the U.K. or whatever, there's been this like double negative in the sense that the dollar has weakened dramatically and stocks have weakened dramatically. So had you have just been in euros, you would have been way better off, right? So there's like that the FX market, although it's not just about trading currencies. The FX market also matters if you're like in stocks internationally, right? Because for the last few years, if you've been in Europe buying US stocks, obviously you have to buy US dollars and US stocks. So you were like double whammy, making big wins because of the conversion rate. But then now, we're seeing the opposite extreme. We're seeing people who maybe in Europe who were very heavily long stocks are rebalancing because they're like, I'm getting killed on the dollar exchange, losing so much value, and on the, because obviously if you're invested in US stock, you're kind of by proxy also holding dollars. So it's an interesting concept.
It is. Yeah, I didn't think about that. It's a good point.
Yeah, so foreign exchange makes a big difference, not only just in trading currencies, but also trading even stocks or investing in U.S. debt. If you're buying treasuries, whatever, it's a pretty impactful thing. What happens with the euro? What happens to the dollar? It's something to think about. So even if you are somebody who trades, this is why again all markets are really connected. Even if you trade like you invest in European stocks or U.S. stocks, considering what's happening in the FX market also plays a role in the timings of your investments, the returns that you can get. So just something to think about.
I was considering a short on oil today as well. I don't really have much of a fundamental backing for this trade idea, which is why I didn't do it. But I quite like the fact that we're in a very clear downtrend. 200 moving average rejection at the fib, previous structure as well. So from a technical standpoint, this looks set to continue lower. But again, if I don't have a trade idea, like a fundamental backing for that trade, it's very unlikely I'll take it, especially with oil. Silver, I would love to go long on silver at some point. The problem is finding an entry. So as I said to Nick earlier, we have a very, very crowded retail market on silver at the moment. I think it's roughly 90 to 95% long on the Edge Finder. So typically you'd want to go against those traders. So rather than buying now, I'd rather wait to see those retail traders get flushed out, come down here, come slightly lower, and then continue higher. Silver is at such an extreme mispricing compared to gold. It does sort of make me want to get into silver, so if we can see silver catch up to gold a little bit. Obviously not in terms of its actual price, but in terms of percentage gain, that would be quite nice. But I'm not sure we're going to see a plus 40% on silver anytime soon. Do I have any positions? I've got euro dollar that's losing. I've got gold that's losing. I've got euro yen that's losing. Yeah, I'm in a bit of drawdown right now. I don't have a position on NAS though, if that's what you're saying. Yeah, no position on NAS. I was in a buy yesterday for a scalp. I closed it right before we had this gap up, which was really unfortunate. If I held it, it would have been a huge trade because it was a scalp that was high lot size. So yeah, looking back in a little bit of pain right now. So my view on NASDAQ right now is I'm not looking to buy, just because the trend is still bearish. I would actually much rather look for shorts until the market's telling me otherwise. So to be honest with you, a short from here actually does look quite attractive. We do have an overbought RSI here, coming up to the 200 moving average, also with previous structure. So yeah, technically looks strong. Actually, I might take that after this stream. I want oil to dump so my USD CAD can stop lagging behind. Yeah, it would be nice. Let's see, Alan. Can you look at US 30? Yeah. It's the same thing as NAS, actually. I would be more inclined to look for shorts here. So wait and see if we can get into these previous highs here and then look to go short. I think is probably the easiest way to go at the moment. My general rule is to only buy indices, so things like NASDAQ, the S&P. I will only really look to go long. But when the market is very clearly bearish, I'm not going to go long. I might look for some short-term short positions. So in this case, rather than selling here, looking for these lows, I might just sell at this point, very tight stop loss just in case, and then just look for a gap. Look for the gap here to get filled, rather than looking for huge swings. Yeah, I don't want to be stuck in short positions I can't get out of. Made almost 5K on this sell for gold. Just chilling. That's really good to hear. Well done. Bullish trend for gold is still intact. Absolutely, I completely agree. I think gold is still a great position to have to the long side, but yeah, I'm still expecting a little bit of a sell-off on gold, whether we can see some profit taking or whatever it may be, just to buy at a better price. I'm still learning candlesticks. Do you have a video on that? Yeah, I've actually just put one out this week about candlesticks, but you're not going to learn that much from candles. I wouldn't say it's going to be a huge part of trading, to be honest with you. All you really need to know is an engulfing candle and a doji, and that's pretty much it. So then you can see a loss of momentum or a lack of momentum either way. US dollar Swiss long, pound CAD short, please advise. I can't advise you. I'm fairly sure you said the same thing last time, so I'll say the same thing again. Can't give any financial advice, so everything you hear me say is just my opinion. Not telling you to ever do the same thing. So dollar Swiss, I would love to go short. I really don't think the dollar is going to find its feet here. I think we're seeing short-term momentum, which is expected. I've spoken about it previously, but we are at a really, really strong level on the dollar here on the monthly time frame. It's not just a technical level, it's a really big psychology level as well, because it's just below 100, coming into 99.5. So whether we can break below and continue lower is a key point here, but short term, it wouldn't be a shock to me if we do see dollar bulls come in and then potentially a break and retest lower. So yeah, something to keep in mind. So maybe a long here is completely fine, but eventually I will be looking to go short. I think dollar shorts are still the theme, but yeah, over maybe the rest of the year, not a short-term idea. What do you think about AUD CAD sell? The thing is, because I don't have an opinion on oil, it's a little bit difficult to get an opinion on the Canadian dollar. I would initially look to go short because we do have a dovish Bank of Canada. The RBA isn't necessarily hawkish, but they're not, they're not rushing to cut rates. So yeah, I think a short position actually makes a bit more sense than going long, in my opinion. And even a short here makes sense. So we've got here, we've got the 200 moving average getting rejected. We've got previous levels of structure. We are seeing rejection here, so possibly a short. If we've got a fib as well, that would be nice. Let's see. No, there's no fib there, but yeah, I think this is potentially a good opportunity to get short on a pullback. New home sales just came in better than expected. Let's see. Yeah, they did quite well. 724K, beat previous 674K. Yeah, some pretty good news here for the dollar today. So we'll see if that can continue or not. What's EG looking like? Yeah, it's difficult to say. I've not seen much to back up EG. Yeah, the only thing I've heard really is that we could expect a range in between the 0.85 and 0.86 area, so it doesn't really leave me much of an option here to do anything. It would be expected for Euro Pound to climb higher into the end of the year because we are expecting, climb lower because we're expecting inflation in the UK to continue rising for the rest of the year or throughout Q2, Q3, which would obviously hold off Bank of England rate cuts. And we've also got the ECB currently cutting, so we might get a small divergence there to go short. But yeah, just now, there isn't really anything here.
Another ridiculous gap to the upside, just like we had gaps to the downside. This market just doesn't like to do anything unless it's non-opening to closing bell. So last couple days, gap lower, push all day, gap higher, push all day, gap higher, a little bit of a reset, neutral. We're coming close to our Wednesday swing high, which would have been April 9th on that fateful day of a 90-day pause. And here we are again, softening our stance on China. There's no way it's going to be 145%. We're not going to fire Jerome Powell. It's like, I don't know what you call that, but I would say crazy comes to mind, because why would you say things that are going to be taken by the news that are going to be the exact opposite the next day? So here we are. Markets are pseudo excited about this kind of relief and maybe a little bit more certainty on like, hey, it's not going to be as bad as everyone is thinking. There's still a lot of technical resistance in the near term. I mean, look, if we somehow surprise today and get up to, this Wednesday high, which is around 54.82. I think that was the futures high. This is actually 54.80 or so on the spike. But you can see all this past support to become resistance. The blue lines represent my SPX sell trade this morning. I'm holding a couple SPX trades for right now. This is my call side. That's my put side. Looking to see how this plays out for the morning. I did get a really crappy fill. The market 5 minutes into the open spiked aggressively, and it kind of threw off my fill. Last couple of weeks, and a lot of these live sessions the last couple of weeks, this is what I talked about. Once we put in a bottom here and we had that pullback, I wasn't surprised that Monday, I said Monday either going to be a wave structure. You go back and check these sessions, but you have to look through a little bit of the noise and see a swing pullback. This is a flat pattern that's going to retest the high. Well, we did so in a gap type fashion, but that's what the market does. Point is, prices are going up. That's helping assets. We're right back into a 200 moving average on the daily time frame, or the 1 hour time frame. But if you go to the daily chart, I think this is where the market comes back and finds some noise. So if we go support here to become resistance, that's clearly a hurdle that the bulls have to overcome. They may struggle at that price level. If we get into this chop zone between 55 and 5,700, that's around the 200 moving average on the daily time frame. Again, we did experience the death cross, which is the 50 and the 200 moving average crossing over. So even a pullback, look, tariff optimism spurs, Trump softens tone on Powell. Yeah, he said that he can't fire the guy. Well, we all knew that going into the quote ahead of time, but you never know. He preaches crazy enough that sometimes you got to listen, and you have no choice but to listen. It's the one president that's on the economic calendar for whatever reason. Like, it just drives me crazy. But it's like everything that has been said is now being backpedaled. It's not a surprise. It's just, what we've been dealing with is a lot of market chaos and a lot of noise and volatility, and all that was created from this structure having this low to high. All this is noise. Now the good thing is noise is heading higher, so that's fine, and it's given a little bit of sense of relief. I'm certainly going to use this to get more capital, have more cash on hand, get ready to deploy it, pick my battles. I don't feel like I need to call tops. I don't feel like I need to call bottoms. I think that even if the market is going to go into resistance and sell back off, I still am interested in, maybe this area as a support zone, and maybe this area as a support zone. What would make us retest the lows again? I don't know. Because right now, the Fed is likely not going to have to do anything until June. If they start cutting rates, they're not going to be pressured and strong-armed into cutting rates early. Trump is clearly backpedaling on the severity of tariffs, and especially the plays with China. But earnings is maybe the next piece that everyone's watching. It's like this week we had Tesla, Thursday we have Google, next week we have Amazon and Apple and Meta and Microsoft. So we have 4 Mag 7 stocks next week reporting earnings. And I know that's not the most important thing because we should have a broader market consensus. But if Mag 7 is still strong, I think that's pretty encouraging that there's good stability. Things have been beat up. There's a rotation that's necessary, and then we can see where the market settles back in. Okay. Alan's asking, do you think this is sustainable? I mean, no, I don't think that anything about this is sustainable. So it doesn't make me a bear, but I think that the market's going to struggle here because the reality of the situation is right now the U.S. has played its cards, right? We came out swinging with all these threats, and all of a sudden we've showed our hand, and that is, well, we're willing to backpedal everything we say. I don't know how that's taken globally, right? I mean, it could be like the U.S. is losing all sorts of integrity with global trade. The U.S. is losing all sorts of. I mean, the question this year is the dollar is losing world reserve status. Certainly seems like it when it's down to the worst start since 1995. The dollar index is down 9%. Gold has been ripping like crazy, outperforming. Arguably, this is insane. Over the last 20 years, if you look at GLD versus SPY, gold has actually outperformed SPY. Now, it didn't happen until this year, but the fact that if you have a portfolio with gold exposure, and now 20 years into it, it's like gold is overtaking the S&P 500. That's crazy. So, point is, on the technical side, we have a death cross. We have a lot of resistance ahead. The bulls are going to have to prove beyond a shadow of a doubt that they have what it takes to get above 5,700 without being a bull trap. I mean, I think that this is a bear trap area. I think that this is potentially a bull trap area. But the pain trade right now is probably risk up. Like the pain trade is up. Why? Because everybody's bearish. AAII sentiment is, weeks and weeks and weeks of red. It's like over 50%. I think that's like one of the worst streaks we've ever had. Let's go to Edgefinder and see what AAII says. So let's go to sentiment and AAII here. So how many readings in a row have we seen? I mean, this is pretty terrible, right? 1, 2, 3, 4, 5, 6, 7, 8. We have 8 readings in a row over 50% bearish. Probably the worst this AAII tool has ever had. On top of that, you have the University of Michigan Senate report, which is the second lowest reading ever in like 50 years. So the pain trade is the contrarian side of that. If everybody's bearish, well, the market probably finds a way to melt up. And we have been talking about this. It's like, how does this market melt up? You backpedal the narrative, right? Instead of it being so doom and gloom, it's like you say, yeah, we're going to find a way to work with China. We're going to find a way to compromise and have a happy medium. Boom. Market's excited for a second. But enough damage has been done. I'm not super convinced that this market can get and exceed this level. If it does, pleasant surprise, yippee skippy, but I'm super skeptical at these highs. If we got to those highs, I think this would be a high swing that nobody's really going to be ready for, but I just don't see sustainable runs. So first things first would be we have support become resistance right in here and right in here. So, today with the big gap up, I mean, the market's already up 3.29%. Is it possible we go higher? Sure. I mean, we saw a 6 to 7% intraday move on April 9th. I think it was like a 9 to 10% move from low to high. I think the Nasdaq was 12%. I mean, one of the most wildest days I think we've ever seen. It was definitely a historic day, but not without more noise. So this high is 54.81 on SPX. So do we end up tapping that today? Is that a little resistance zone? Do we run into here's some gamma levels? Like 5,500 is a pretty big level that I think could get hit today. Look, if the markets are going to rally, if we get equities to rally, I mean, and we'll go across the board, right? Like we're doing a lot of U.S. instruments right now, but across the board, if the globe is up, I mean, go to the heat map right now. Okay, you have 84.4% of stocks advancing in the U.S. You see some red. Okay, let's see where things are shifting. You're going to see all your defensives, all your crazy, staples. These are all going red today. So Coca-Cola down slightly, you know, Procter & Gamble down a little bit, Clorox down, or Colgate-Palmolive down, Pepsi down, energy, you know, XOM, CVX down. Healthcare, that's interesting. Bristol Myers Squibb, I don't know if they have earnings today, but they're down a little bit. But there's a lot of green, right? Nvidia's making a big comeback back above $100. I mean, whatever, it's fine. Microsoft back to $379, Apple back above $200, Amazon making a nice little rip up, almost 7.5% today. Tesla surprisingly had a terrible earnings report. It's up 7.62%. Why? It's one of the most liquid and highest volume option trades in the market. And so being down almost 60% from peak to trough well before earnings, a lot of the crap was priced in. A lot of the negative was priced in. You know, I think Elon Musk is done with Doge in a couple of months anyway. And I think everyone at Tesla, every investor rather, is like, go back and do your job, right? As they say, don't quit your day job. So if he's a Tesla guy, if he's a SpaceX guy, is it League of Legends? Like, what's the video game that he claims to be a master at? You know, how does he have the time to do all this stuff? He doesn't. Anyway, but Tesla's up. And a bit of a contrarian play, even with the miss in earnings, but a lot of the bad stuff was already priced in. You know, I'm sure there's some optimism there. It's like there's still the robo taxis in summertime. I think June is a rollout. They haven't delayed that. Deliveries are down, revenues are down. Everyone's vandalizing Teslas across the country. It's like, it's awful. But what are you going to do? One thing I thought was interesting too is the EV space has played a lot of catch up in the last decade. I mean, I think since what 2015, 2016, 2017, when Tesla started to emerge, not much has changed for a Tesla vehicle. I mean, China right now, BYD is the big threat because they're making more cars and cheaper cars, and they're starting to, you know, have a bigger market share. So, I mean, if Tesla really wants to be competitive, I'd like to see some innovation. I'd like to, but who knows? Anyway, if I get it called away, I just want to make some money. That's all I want. I'm an income trader, trying to generate the income. And if Tesla gets flipped this week for a couple bucks, freaking great. All right. Anyway, jobless claims and initial jobless claims, continued jobless claims. We have to watch these trends. This is what makes me nervous from July to December. If these start to tick higher, that is the question of soft data becoming hard data. That is the question of this U.S. potentially facing a recession and real recession risks. Meanwhile, that's why I think gold, as Lee said, you know, felt weird to press the sell button. I think gold is still a good trade for 2025. You know, and the crazy part is we could be talking about a gold bubble that has no upside cap. You know, gold could be $4,000 an ounce, could be $5,000 an ounce, could be freaking $10,000 an ounce. So I'd rather participate in a bubble like that than trying to call the top. All I'm waiting for is a technical dip. And hopefully we're starting to see the signs of it where I can get a chance to participate in something by exercising some patience and not feeling like the only way I can get gains on gold is by buying freaking all-time highs. So I'd like to see a pullback. So today feels a little bit better. It feels a little bit more normal. It is nice to see in currency strength today that we have the Swiss getting weaker and we have the Aussie New Zealand top. We certainly have some risk on flows today and some decent volatility, so that is helping.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.